All right, here we go. Good morning, everybody. Just real quick before I get started, I just want to always make sure, can everybody see the screen? Can everybody hear me really well? Nothing looks insane. Just want to make sure before I get going that everyone is able to follow along. All right. Well, that's one of you saying something, but hey, good morning. So when I was trying to come up with this class, right, when I was trying to think of something to really go over, I think that the most important thing was I really wanted to put all of the information in one place. So this is going to be a little bit longer of a live stream, and I wanted to, like, these were my main points. I wanted to put all the information in one place. I wanted to basically teach it in a different way that I've taught it in the past, or at least present the information in a different way, because everybody, processes things differently, and sometimes we hear things a little differently, and it gives you that, that aha moment that you really need to really get you going in the right direction. I know that, in my learning, it took quite a bit. It took a long time before I really started having consistent back-to-back aha moments and like being able to really put together a good plan. So I wanted to put this together in a different way so that everyone can maybe, have those. Before I get started, I just want to say that everything I'm teaching here, nothing is financial advice whatsoever. Please don't take it that way. This is all for educational purposes only, and not to be misconstrued for a, some kind of financial advice. Good morning, good morning. All right, so just jumping right into this. This first slide, rules before trading. I wanted to start off with everyone, I'm not going to say everyone, but a lot of people usually can figure out when to take trades a lot sooner than they can identify times when they shouldn't be taking trades. So I put this on the first slide because I've had questions as well about, well, why didn't you take trades this day or this day, blah, blah, blah. And I have certain days where I don't even pull up the chart. I don't want to see it. I don't want to know about it because in the past, my results on that day have been skewed based off of manipulation of the market or accumulation phases of the market because of news and so forth. So on here you can see when and when not to take trades. I only take trades in my session, and I know that you all probably know this as well. I'm a New York session trader, so 8 to 11 a.m. If you're London session trader, 2 to 5, Asian, 8 to 11, and these are all Eastern Standard Times. I do not take trades before the news. Now, I have in the past, but I'm very heavily getting away from that because, so like if there's news in the U.S. session, right? Let's say it's at 8:30, and I want to take a trade at 8 because it looks like it's set up. First off, taking trades in the first hour can be kind of unreliable, in my opinion, as well. And then you add news on top of that, and a lot of times the news will put you in some kind of accumulation phase so that the news can be the thing that manipulates the market, pens through you, or it just doesn't do what you expect. So the market will go into consolidation, and I've found that it'll look like it's going to go, and then it just doesn't. So I've kind of gotten away from taking any trades before news. So this one as well. This is a very important one because this took me a while and a lot of trial and error before I figured this out. I do not take trades in the New York session on FOMC days because you know that those FOMC days are kind of towards the later portion of the day, around I think 2 o'clock in the afternoon, typically on any given FOMC day. These FOMC days, the markets, like I just said about the previous news, will get choppy, manipulated in some kind of accumulation pattern. And the last one, I do not take trades after a 3-day holiday in the U.S. So like if we have Friday was a holiday, and then we have Saturday, Sunday, and then Monday, right? So now we've had 3 days. Or the other way, Saturday, Sunday, and then Monday was off. I don't want to take trades on that Tuesday. And let me tell you why. It just goes right back to what I just said here about the market's getting choppy, and you can scroll back, okay? Scroll back, and I promise you'll find that I'm wrong and I'm right, and it becomes very 50-50, right? Well, he said this, and then on this day it moved pretty well, but then on this day it's choppy. So in my experience, I have just found that maybe it's a psychological thing, maybe it's me, but I just feel that I do worse on that first day back. So I've chosen to just remove that from my trading plan, or really add this to my trading plan. I don't take trades after a 3-day holiday. Yeah, so, all right, next slide. As I go through this, I'm going to, in places, stop and ask, does anybody have questions about things? So if you have questions on any slide and I go forward and I don't answer them, please do me a favor, either write them down or take some kind of note. And once I get to the questions, throw them all up in the chat, and I will be happy to answer every single one. All right. The core concepts. What am I talking about? I am talking about the core concepts of trading in general, but also of this strategy, okay? And I want to kind of point this out. Your strategy, your trading plan, the thing that you're looking for, the specifics, deep down, what are you looking for on that day to happen so that you can take a trade, is different from all of your considerations while trading. The things that go into your analysis of the market are different from what am I looking for on any given day to take a trade. I can know all of this information, okay? Does that mean I'm going to have every single bit of information up on the screen? So like all of these areas of interest. Am I going to have every single one of these things up on the screen? No. Am I looking for every single one of these things every single time? Maybe, maybe not. It really depends on the day. It depends on what I'm looking for specifically on the day, right? I just take into consideration all of these things, and I think that might make a little bit more sense as I go along. Okay, so the trade setups, number one, the core concepts. Signal days, okay? So I've got this listed out, A, B, and C. These are the 3 different categories of trades that I'm looking for. Signal days, the 3 days of previous day's high and low. The inside days, those can be false break inside days, or they can be a trending day on the following day. First red day, first green days. Then I have my opening range and initial balance trades, and I've listed these as daily and weekly. The daily opening range being the Asian range, and then the weekly being Monday is your opening range, and then Tuesday being your initial balance. I know I'm going fast. I promise you I'm going to have pictures and slides like that in the next slide, or next couple slides. 3-day cycle. Day 2 trend trades. Day 3 trend reversal trades. Okay, those are the setups that I'm looking for, and that's really it. How I break it down from there is what's important, right? This just gives me a broad spectrum. Wow, okay, today was day 2 of the 3-day cycle. This is where we're at within the week. Tomorrow's day 3. What do I want to look for? Is it going to be a trend? Is it going to be a reversal? Okay, now I need to break it down from there. Okay, so that's what I was kind of talking about. You've got your broad idea, and then you're breaking it down more and more. Core concept, price action. What am I looking for in price action? 3 levels within the day or the week. Okay, that lower low, and then you got the 3 levels of rise, or that higher high, and the 3 levels of drops for the dump and pump and dump scenario. Or you have your opening range and initial balance, where you have the market's moving down, or let's just say it's going down, right? And I've showed everybody that I'll measure from the very top of the high of the week all the way down 3 levels of drop, so that I can find a potential strike zone for the trade. Also using that pips to profit indicator. If you don't have the link to that, I think it might be in the description of this video, but if not, it's in the Discord, in the link in the pinned messages. The 3 push variations. So a lot of people have asked me, well, can you do a whole video on 3 push variations? And I'm going to. Absolutely. I'm going to have a video specifically dedicated to these 3 push variations. Stair step. I'm talking about burst, pause, burst. So it look like stairs, right? The triple top. So the market has pushed up to a single area and is doing a triple top. That's a 3 push variation. 1, 2, 3, and then break, and it breaks down. Or at the bottom, right? Push down, 1, 2, 3 into the low, and then it goes back up. Another 3 push variation is a 3 bar 1, 2, 3. So just 3 bars. That can be on the 1 minute. That could be on the 15 minute. Generally, I'll look for this pattern on the 15 minute because it seems to be more relevant. But a 1, 2, 3 to the high or 1, 2, 3 to the low usually will result in some kind of consolidation on the 1 minute, and then the market will reverse. That's a 3 bar pattern. Then you have a 1, 2, pause, 3, and again, think about it in this, right? We got 1, 2, 3 to the low, but just add an extra bar in there. A 1, 2, a pause bar where it just goes sideways, and then that third bar coming down or up. Yeah, I see people are already adding questions in there. Hey, that's great. Like I said, when I get into a little bit longer here, please do me a favor and drop all these questions in there when I ask about the questions, and I'll make sure to get every one of them answered. I'll even go back in the slideshow if I need to. If you're in the stream right now, do me a huge favor and hit that like button. These slideshows and stuff, they do take me a lot of time, and I would really appreciate the support. So, let's move on. M's, W's, and head and shoulders. These are another price pattern that I'm looking for. They're very important within the week. They're very important within the day. And I'm going to show you some examples here in a little bit, but let's get through this. Market structure, higher high, higher low, lower low, higher high. So I think that a lot of people in here probably heard this strategy before. This is a whole strategy on its own in reality, right? But it's something that's very important, and that's market structure. And I just had a market structure video not too long ago. So like if the market's moving down, making lower lows and lower highs, and then all of a sudden it makes a higher high, that's the break in structure. And now I'm looking for, lower high, or higher high. Geez. Higher low. If I can get my words out, that'll be just great. I can actually fix that, but I'll fix this in the slides. So like if the market's going up and all of a sudden it's going higher high, higher low, higher high, higher low, and then I get a higher high, lower low, I would get a lower high. And I know that says higher high. Got it. I'm going to fix that. That should say lower high. Next. So we've got price action patterns. We've got all of our some of the core concepts of price action on here. Areas of interest. These are the areas on any given day that I'm looking at that could become important. That's, like I said, does that mean I put all of them up on my chart? Not necessarily, but they are considerations and pieces of the puzzle that I can look at to give me and help me build a thesis and an idea of where I can take these trades. So you got your number boxes, the 50, 100 pip box. That's the price, right? You've got double zeros. So like, let's say 1,000, or I'll just go $100. We got $100, and then no, I'll do 1,000. You got $1,000, and then 25 pips up from there, 50 pips up from there, 75 pips up from there, and then 100 pips up from there will give you your 100 pip box. Current high and low of the day. So if Asia puts in a high and a low, that's your high and low of the day, and then you can in London trade off of those levels. Or if London extends that range, then you can maybe trade off of those levels in the New York session. Let's see here. We've got previous days high, low. Those are extremely important, right? Because it's helping you find your day one of the 3-day cycle. It's also, if the breakout has failed, can become support and resistance on the next day. Again, I'm going to go through pictures. I got it. I'm just running my mouth right now. But this slide is very important, so it needs to be, all this needs to be said. Your current week, high and low. So if Monday puts in a high and Tuesday puts in a low, that's your high and your low of the week. And those levels are very important. And then, of course, previous week's high and low, opening range and initial balance of the week. And then, of course, the Bayesian Range, high-low, which is the opening range for the day. And I haven't really gotten to this too much in any videos, so I'm going to be getting into it today. And then I've also added in here your 1 minute, your 5 minute, your 15-minute time frames as the core time frames that I use. Now, does that mean that I never flip to the 1 hour, the 4 hour, the daily? No. But I typically will go to the 1 hour just so that I can scroll back in the chart faster, or the 4 hour. And I look at the daily just to see, we've been pushing up or down for a while. Where are we going? Where's the market? What is the market trying to accomplish right now? Is it trying to accomplish a larger scale move, and I'm not aware of it because I'm on the 15-minute chart? So that's when I kind of go to the daily, or like I said, so I can scroll back or whatever. Oh, geez. All right, mindset-wise, right? I'm looking to only take 1 to 2 trades a day, max. I prefer to only take 1 to 2 trades per week. More time at the watching the market does not equal more money. Watching only 8 pairs total and narrowing down to 1 to 3 on the day is ideal. Me specifically, for anybody who was watching in the Discord a couple days ago, I've actually narrowed it down even further, and I'm only going to be watching 4 pairs from now on to even further my specificity, I'll call it, of what I'm looking for. Watching more pairs does not equal more money, and I've found that's why I've narrowed it down further. I've found that the less that I look at, the more accurate my trades have been. If a trade happens on a different pair, well, I don't know about it because I didn't see it. It should look... Oh, sorry. It looks like it should go in my direction, or it looks like it should go a direction, is not a trade setup. I think we've all at some point said, wow, that looks like it should go up, right? That's not a trade, in my opinion. I'm looking for very specific things. Once those boxes have been checked, that's my trade, not it looks like it should go a direction. I'm looking for, if the market does this, I will do this kind of statements. And I always want to have a plan. Your trade plan will make you money. Your ability to manage your emotions is what keeps the money in your pocket, and not capitulating weeks of profits or positive results into the toilet. Again, we've all been there, right? We've been doing really well. Trade plan's going great. We're following it to the T. One little thing happens. We get a little hiccup, and then in one day we take, 3 weeks, a month of profits, and we dump them down the drain because, let's say it's a day 2 trend day, and it's a Friday or something like that, and it's going to run into the close, and we keep on trying to counter trend. Next thing you know, you've taken 7 trades that day, and you're in the toilet. I need a system that's easy to understand, duplicatable, and rules-based. So part of my trade plan, right? All of these core concepts go into what I just said. I need a system. It needs to be something that is reoccurring within the market, and all of these things become one core concept. All right, let's get going. Here we go. So this slide right here, I've started incorporating into pictures. Okay, previous week's high and low, and this is just a slide that's examples of why these areas could be important. This is the Euro US dollar. It's this prior week. I didn't exactly cherry pick. I just went back to the most recent week and started grabbing some pictures. Previous week's high and low. Oh, excuse me. Previous week's high and low. Acting as resistance, support, breakouts failing. When the breakout fails, we either are looking at the 50% level or the other end of the range. Let's see here. We got previous week's low down here. previous week's high. This is a different variation of this over here, where we have a breakout in the beginning of the week. This is a Monday. They pull back and continue, but then the breakout fails on this Wednesday, and again, 50% level or other end of the range. So also on here, I have initial balance low, the initial balance high. You also have, this is the opening range high that obviously it turns into the initial balance high when it's not broken on this Tuesday. And then within the week, you have a breakout that has failed on level 3. And I'm talking about level 3 using price action, not the number boxes, okay? Because we have a high, comes up, makes a higher high, so I draw my new level, and then the third push up into that high within the week, and the dump back down. So all of this turning into these levels, right? Okay, let's go. Move on. Sorry for everyone who's wondering what I'm looking at or why I'm kind of going a little bit slow. I'm looking at my connection. I want to make sure that this is still streaming appropriately. Can everybody still hear me? Is it laggy? Is the sound good? How's everybody doing? I'm getting a warning saying that things are going a little bit slower than normal, so I just want to make sure. All right, good stuff. I'm going to keep going then. All right, 3 days, previous day's low. So, I'm going to hit some of these setups now. All these trade setups, right? I want to give you all examples of these things so that I'm not just speaking words. It's not just words on a chart anymore or on a slide. 3 days, previous day's low. Trade setup for me. 1, 2, 3. Now, of course, these are going to be more effective at certain areas in the chart, like high of the week or high of the month, low of the month. I'm sorry, low of the month because we're going down, or low of the week, etc. But the main thing that I'm looking for with these is I will draw a trend line on here, and then pushing down into the low, consolidating at the low of the week. Of course, this is going into a new week, but it gives you an idea of we've had 1, 2, 3 days down and a consolidation. Look at this. They come up and put in a higher high right here. That's the higher high, higher low, right, for the reversal back up. And now I have my trend line here. I know this we're not trading trend line breakouts, but it's just giving me a good reference. This is also consolidation at the low of the week, giving you a day 1 right here and day 2. So when this becomes day 2, right? So if I said, wow, that's consolidation at the low of the week, maybe we're going to blast up above this level, giving us day 1, day 2, because that's very common on Mondays. And you'll see that a lot, where they've broken a level on Friday and then they come back above on Monday. Or Monday will go down and then Tuesday will come back up, making Monday day 1 and Tuesday day 2. So the idea, well, maybe today will become a day 2, a trending, strong moving day. All right, and I'm going to show you a very good way within the day to determine will that happen. Okay, moving on though. 3 days, previous day's high. Again, so you've got 1, 2, sideways 3, and again, I have my main trend line here, and then I have an intermediate trend line drawn here. And obviously, you can see the trap volume up top. Again, let's see this. So this is Wednesday, high of the week. Breakouts failed, gone sideways above the low, and then dumped. Okay, so that's giving me my volume trapped up top, making this, not only is this an inside day, so this could blow through this and give a measured move. All things to think about. Inside day trend. So like this, right? We got an inside day. It did hit the previous day's high, but like, okay, yeah, so it did hit. Never mind. Well, we won't use that one. Inside day trend. Seems like this trade has really caused quite a ruckus, right? Quite a stir in the community. And I think the more you look at it, I was not watching gold, but everything that he says, right, is, I mean, he's got 20 plus years of experience, guys. So he definitely sees everything through his own eyes, right? And it's up to everyone else to kind of understand it. And I'm actually going to make a video on the style of trade because I do, and I don't mean to ruffle my own feathers, I do understand these trades very well. And he said this a lot, okay? The space between, they go up and don't take out the high of the week. There's space up here. They've made a higher high without taking out the high of the week and then squeezed, okay? And then you'll see in these parabolic setups where it's ramping, and then ascending triangle and the explosion. But the inside day, the trend, right? So the whole day becomes a measured move type of thing where you can pull from the high to the low and give your range expansions, right? Also, I would like to say for this trade, the high of the month from that previous month hadn't been taken out, so we were consolidating basically below a level for it to explode through on a higher time frame. Phil, I'm sorry. For those of you who don't know, I'm a student of, I'm not going to say a student, but, you know, everything I've kind of learned, not everything, but a lot of things that I've learned is from Stacey Burke. So, like, this trade, for a lot of people, have been asking, you know, what did you think? That's what I think. Anyway. Inside day, false break. So you can have this on an inside day. A lot of people struggle with inside days. So you can have a trend, or you can have this where the inside day false break. So you have your inside day right here, and we're at the high of the, nope, not at the high of the week. Again, price action patterns. I'm looking for the inside day. I'm looking for 3 levels of rise, and I'm anticipating this is either going to be a strong breakout because it's going to be a trend. It could. Let's just be honest. Like, this could explode and just go up. Or I'm looking for it to be a false break. And I want you to notice that once the levels are broken, once very important levels are broken, how do they, 1, get to the level? And 2, once they come out of the level, what do? Okay, because we all know, or maybe not, when a 1, 2, 3 can end a move. 1, they break the level, right? They come out of this inside day. 1, pull back. Hit it again. 2, pull back. Hit it again. 3, descending triangle, micro triple top, and the collapse back down. Okay, so now the idea, see how they came out of this inside day. Now there's also times when they'll just 1, 2, 3 back up to the high and then roll over, and that would be the false break as well. But this is a very good example. Okay, so first red day. Now this is where Stacey and I might do things a little bit different, and a lot of people have pointed that out, and that's totally fine, right? This has always been my interpretation, just how I do them, to help me understand and to give me a more rock solid idea, right? I look for the big pump day, and then the very next day to close as a day that closes below the open. Me personally, I like to see it like this, where we have a big pump, a day that closes below the open, and I want to see all of this space down below. Now, I understand this did not roll over completely and go back down. Got it. All this does is give me some kind of directional bias for the next day. And that directional bias is I want to sell the high of the day. That is, for anybody who's seen my entry criteria video for signal days on the first red day, I've got that flow chart that tells you what I look for on specific days. On first red days, I want to see a sell high opportunity. Sell high of the day, sell high of the session, etc. Large consolidation, hits the high of the day, 1, 2, 3, micro M, blah, 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 and it rolls over. Got it? So, oh, go back. These first red days, that's all I'm looking for is a sell high opportunity. And you can see this is what it gives you here. First green day is just the opposite of that. I don't think I included a first green day in here for some reason, but if you would flip this upside down, you would have a big dump day, a day that closes above the open to the green side, up close day, and it doesn't retrace more than 50% of the pump, and then a buy low opportunity. Okay, so day one, 3-day cycle. Okay, we're going into the 3-day cycle now. Finding day one in the 3-day cycle. Volume trapped underneath a weekly higher low. That can be the current week. And it does apply to the previous week as well, but for this example, I'm just showing you Monday is the current week. All right, and we've got pushes down into it. Breakout fails. It attempted to go below the previous Friday's low and has failed and came back up. So that is a breakout that has failed at the low of the current week, giving us day one of the 3-day cycle. Day two of the 3-day cycle, I am only looking for a buy low opportunity because a lot of times those day twos are trend days in the direction of the breakout that has failed. So on this day, I'm looking for a buy low opportunity, low of the day. This is the Asian range. You get a W, and the rest is history. And I'm going to get more in depth in how to actually articulate your trades on the day here soon. So that was a day two example, right? This is day two buy low because of it's in the direction of the breakout that's failed. Day threes, 3-day cycle reversals. This is the previous week's high, this red line that goes across. Day one, day two is the trend day. I think, is this actually a continuation? Yeah, it is. So this is actually the same week, right? So day one, day two, day three comes up. Again, we're at the high of the week. So on day three, we're at the high of the week. A lot of times, day three can become day one because the breakout will fail. Day three reversal. They come out and we're in the Asian range. They break out. They pull back. They go down 3 levels of drop. And I'm going to explain the Asian range and the 3 levels on trend days. And I think it's going to really shine some light on when to use the range expansion and when to really hold for a larger move. Let's see. Day one, day two, day three. So we're in a strongly moving market, US dollar, Japanese yen. They've broken down, right? And then it's not gone any lower. Instead, they just start going back up. They should have rolled over or pumped up and hit the high and then rolled over. Doesn't do that. Day one, the breakout fails, okay? So they go up, the breakout fails, and they come down below. See, note this line, okay? This line is very important. The breakout fails, and they come down below there. And then project that across. The next day, the breakout does not fail, and it keeps going higher. This becomes volume trapped, okay? But this day two, we're now going back up. All right, I want to get into this Asian range. Before I keep going, the Asian range is very important, so I'm gonna stop here for a second. Who has any questions? If you've already asked questions in the chat, I'm not reading back through all those. Please do me a favor and throw the question back up in there, and I'm going to try and answer anything I can from what I've already talked about right now. But please try to make it relevant to what I've already talked about, the questions. I also see I've got 184 people in here. Just about, actually I might have like 58. And the stream's only got 34 likes. Please do me a favor and hit that like button on the stream. I want to, try and advertise as much as I can. It really helps the algorithm to get new viewers in the stream. Do you think it's safe to stay away from day 3? Absolutely not. So day 3 is usually, all right, so I got it. Day 2 is the day that you're looking for a buy low or sell high in the direction of the of the breakout that's failed. But each day of the 3-day cycle has its own behaviors that you're looking for. So within day 3, okay, if I'm looking for day 3 to maybe become a day 1, I'm just watching to see, does it behave a certain way? Because I want it to turn into a day 1. Now, day 3 could also become a trend trade, and that's fine as well. Can you see first red week and first? Can you see first red week and first green day? I don't understand what you're asking. Yes, there are first red weeks and there are first green weeks, and there are. I don't know if you're asking. I'm sorry. Can a day 2 become a day 1? Yes, but it's. Yes, it can. Short answer. Will you go with... so if you have a first red week and then you get a first green day, am I looking... It depends. So if it's at the low of the week, they could be pumping back up. There still might be a lot of space for them to pump back up to the high of the week. So if it's a first red week, it's a sell high of the week opportunity. And if you're at the low of the week, and the opportunity presents itself for first green day, yes, I will take it, but I'm probably going to count it more as a scalp. Whereas if we're at the high of the week and we get a first red week, and then I get a first red day, I'm going to take that with a lot more weight. Entry criteria, yep, we're going to go over it. Yes, so better trade, initial balance. Yes, initial balance, opening range, those are the good, in my opinion, those are the best trades because they can go from one end of the range all the way to the other end of the range, or do a range expansion and keep going. Once you have an understanding of opening range, initial balance, I'm not, again, nothing's financial advice, but once you have a really good understanding of that and the concept of the markets only do 3 things, breakout and trend, breakout, reverse, or stay in a trading range, you are golden. Do I have a Discord? Yes. It's in the link in the description. First red. Hold on. Sorry, I'm reading through all these. First, let's see. Previous week's opening range, initial balance. Does it have a significance? Dan, I would never BS anybody. I actually have never back tested it. I have a feeling that it probably does, but I don't know the answer solidified. I don't use it though. What currency pairs are you going to focus on moving forward? Hold on. Give me 2 seconds. Take a look here. So I've got in my watch list from now on. What is the world? What is this doing? I've got GBP, JPY, USD, JPY, Euro USD, and GBP USD. Those are the 4 that I'm going to be looking at in the future. I like how those move, and I've been pretty successful using those in the past. Let's see. If it's a day 2 buy low and then day 2 breaks the previous day's low in reverse. If it's a strongly trending market, hold on, I don't know what are you referring to this scenario where day 1 and then on day 3 it kept going higher? Or are you asking on I'm going to have to review that question. Come back. In this chart, where is the entry? We're going to get into entries in a little bit. Virtually every day is tradable with a specific setup, correct? So, yes. There is a setup every single day. Is it ideal? Maybe not. Okay, so you have to... That's where I'm going to show you this Asian range thing, and it's going to... might blow your mind. You might already know about it if you've ever looked at Beat the Market, BTMM, Steve Morrow's stuff. Let's see here. Are all of these setups for Asian session, or are they different sessions? There are trades in the Asian session, but I don't trade Asia generally, typically. Maybe on a first red day or a first green day I will trade Asia, but I'm usually only trading New York. I don't always understand. You're very welcome. All right, so I think I've made it through all the questions. Higher on the inside. Yeah, we're going to go over that too, because I think maybe I didn't explain that well enough in a previous video, because I talked about it. I just don't think I explained it in a way that everybody understands. All right, I'm going to keep going. Please, if I didn't answer your question, again, take note, and at the end, I'm going to do question and answers until I answer every single question. I don't care if the stream takes 4 hours. I'm going to get through everybody's questions. All right. Asian range. Oh, take this. I don't know why I'm wearing a jacket inside, but it's getting quite warm. Asian range. The Asian range that I use, and why do I use it like this? Time does not change. The time is the time. It will be the time until the end of time. Okay, so 8 p.m. to 2 a.m. I'm taking the highest high and the lowest low in between those times, and I'm going to project that line across. And you can go back and back test it yourself. You're going to find that it's insane what these levels do. The highest high and the lowest low, project my lines. That is the opening range for the day. And I've noted on here, trend days do not counter trend the range expansion of these days. I'm going to show you why. Here are some daily template examples. AR stands for Asian range. Bull trend model. You have your Asian range. They come out of the Asian range, breakout, pullback, continuation. The leg up out of the Asian range is level 1. Once they break that high is level 2. And once they break that high again, now you're in level 3. These are trending models, by the way. These are trend models. So bear trend model, you come out of your Asian range. That leg out of the range is level 1. The pullback, once they break that low, is level 2. Once they break that low again, level 3. All of the this area before they break the low is level 1 consolidation. So you're in consolidation until they break that low into level 2. Here are stop hunt low rise examples, stop hunt high drop, come out of the Asian range. So let's say it's day 2 and you're looking for a buy low example, and I think that, yeah, boom, look at that. Okay, stop hunt low rise. That's exactly what I'm talking about for this example. And then you get your 3 levels back in the other direction. Stop hunt high, get your M at the high of the day, drop. I think those are relatively self-explanatory, but you're always looking for this. Once you get for this kind of template, stop hunt low rise, stop hunt high drop, you're looking for a W out of the range. All right, so now I have some examples. Okay, stop hunt low rise. These are the times, right? So it doesn't matter if this was 8 o'clock, 2 o'clock, whatever the highest high and the lowest low, and then the entire day has now consolidated in between the opening range high and the opening range low. Notice how they come out of the Asian range. They also hit the previous day's low. All of these things will come into play, you know, depending on what setup you're looking for on the day. This is just going to help you with your entries and with understanding that, you know, some people might look at this at, oh, geez, if I'm looking for a buy low setup, right? And someone's like, oh, well, that's a low bear candle. I'm going to get in here and expect it to go 300,000 pips and I'm going to be rich. But they haven't broken out of or tested the opening range high or low. They're just consolidating above it for the move back up. 1 push down, 2 pushes down, 3 pushes down, engulfment. Okay, and then notice how they come back up in these 3 bursts, 3 levels. Boom, boom, boom. So if you wanted to hold this all day long, all the way back up to the high of the range, there you go. Stop hunt high, drop. Again, previous day's levels come into play, and you've got, this is the high of the 2 o'clock candle and the low of the Asian range. They come out of the Asian range, boom, up, down, 1, 2, 3, engulfment. Okay, so this becomes a micro extended M at the high of the day, and they come back out of the Asian range now, pull back, drop, pull back, drop. So come out of the Asian range, that is level 1. Once they break that low, you're in level 2, and then level 3 down through the low of the day. This is the, you can also use this as a range expansion opportunity. Bull trend model example. Again, all day long, these times just become very relevant. And again, anybody who was in the Discord with me the other day, I used and showed this on, I think it was the Euro. Yeah, I was on the Euro. Am I in the Euro right now? Yep. So I was just scrolling back through and just basically back testing and going through it and showing everybody how important this Asian range is. And I think that there's lots of other people that have talked about it as well, but about it because of how important it is. But you got your lines projected across, and then coming out of consolidation, pull back, up, pull back, up. So this is the bull trend model. Let's say I did a range expansion. I pulled the tool from high to low. But just notice how it comes up in 3 levels, right? So if you come up and pull back, it comes out of the Asian range like that. And let's say you're in a long and it starts to pull back and you're like, oh no, what's going to happen? You know, you got to wait for at least the second leg back up to see if it turns into an M at the high of the day. Hopefully you're already at break even, etc. But or maybe you're looking to buy the low of this consolidation for the second leg level up. So like you're in level 1 and your idea is this is a breakout. I'm in level 1. 1, don't counter trend. 2, I want to benefit from this move, but I'm up high in the day. I'm scared, you know, we're at the high of the day, blah, blah, blah. Yeah, they've only gone 1 level. So we've got 2 more levels to go. There's your benefit right there. Bear trend model. Times, like I said, they break out. First leg down, pull back. Once they break that, you're in level 2, pull back, etc. So, and I said this the other day as well. If you were to use this only, if you were just to use this, I think that it would raise your success by a little bit, okay? But you combine this methodology and this idea with trade setups, and that's where it's going to become even more relevant. If you combine this with our style of trading, with the 3-day count, and all of these core concepts that I talked about on this slide, right? You combine the Asian range on the day itself, because that's the opening range initial balance for the day, and you combine that with opening range initial balance for the week, 3-day cycle, and these signal days. I think that your probability of success and your edge in the market is going to be a lot more effective. Okay, so that it basically concludes all of the Asian range slides and stuff that I've got. Now, I'm only an hour in, and I'm going to go into the charts here in a second, and we're going to go over lots of different things. And I'm probably going to start on the euro, and I can go over some entry criteria pieces using the 3-day cycle. I'm going to go over last week's super interesting week. Show some of the trades, show 3-day cycle, the signal days, opening range, initial balance, and Bayesian range. If you are still in the stream, do me a huge favor, like the stream while I pull up the charts. Let's see here. Yeah, we're going to get the euro pulled up, and I'm going to start with that. For everybody in here, what are we thinking about this Bayesian range idea? Who's heard of it? Who's used it? Like, I use it now, but I'm going to be implementing it way more in my trading as far as finding entries and stuff, because it's crazy. I think it's crazy accurate, and I think it's going to help me, and it could help a lot of other people as well, hold trades longer. Instead of just, wow, it's, we've gone down 25 pips, I'm going to close the trade. Well, we're only down one level, and it could go down another 50 pips. Why would I close the trade, So I think it's going to be great for increasing my risk to reward even more than it already is. Let's see here. I need to get this back on candles. Let's get this pulled up. There we go. Boom. All right. Question regarding all trading sessions: do we need to be in the trade within the first hour of the 3 hour? You don't need to be in the trade at all. You could just let it pass by. But it's whenever it presents itself. There's not a specific time that the market has to. It's not cookie cutter, right? So you just have to look for where I'm in my session. Is the trade presenting itself? Yes or no? Is it more applicable for certain pairs? I've found that you could do it on the NASDAQ. You could do it on... Here's the thing with opening range and initial balance, okay, Michael? The opening range and initial balance, you have it for the year. You've got it for the day. You've got it for the week, blah, blah, blah. Like, there's an opening range and initial balance for the session. A lot of people use opening range initial balance using in stocks. You've heard stocks opening range breakouts. So it applies to everything, Michael. Asian in London to trade US. Heck yeah, absolutely. I did notice there are... Absolutely. Yeah, I'm telling you, the Asian session is super important. And anybody who's ever... I think ICT talked about it, but he talks about it in a completely different way. Not a completely different way, but he talks about it in a different way. And this is the system that I've backtested and I'm going to be using. So let's zoom out. This is the euro. And just get some stuff up on the chart, okay? Last week, we had the opening range high. And opening range low / initial balance low for the week. Put some previous day's levels up on the chart. There we go. Okay. So the Tuesday becomes inside day. We have basically a breakout, day 1, day 2, day 3. This is the third day of the week. Opening range high gets hit. And I think anybody who's seen my opening range initial balance video, I did say that Tuesday is usually... I'm looking for the trades on Wednesday because I've found that they are usually the larger trade. But there's also a lot of great trades on Tuesday where they've broke out of the opening range high, consolidated, and then reversed. So I'm not going to retract my statement from that, but I will say that there are great trades on Tuesday. But this being pretty pretty perfect. And the fact that we hit it in the wrong time of the day for me, but if you were in London and you saw this, congratulations. This is a false break on the inside. It's kind of an inside day, but it's not. It hit it right there. Regardless, false break of opening range high. When you're looking at opening range high failures, you're either looking at the 50% level or for it to return back to the other end of the range. But the first place that they might go, because it's a false break of the inside day as well, or the previous day, is down here. Okay, so let's break this down in an Bayesian range way. How could the Bayesian range have helped you in this situation? I want you to take note. Obviously, this is the opening range high / initial balance high. Got it. Let's delete these lines. What is going on with this? There we go. Now let's get these correct hours put up. Actually, can I just do it like this? Is it going to pull up? Let's see. It does, but all right, we're going to have to hit the replay mode, come back here. Oh, goodness. Did I get it? I think I got it. There we go. Okay, so 8 o'clock, 2 o'clock gives me my high and low for the Asian session opening range of the day. First session of the day, first period of the day. And I don't know if I had this on my chart example, but look what happens. So they had a breakout of the opening range of the week, okay? And it's pulled back inside. We're still in the Asian range. So if you were waiting for an entry, we've broken down below the 50% and consolidated. And let's look at the time of all this. So it's kind of late in the, pretty much coming out of the London session. So if you didn't want to take that because it's the end of the London session, let's come down here and look. How could I have benefited if I was in the New York session? We have 1 bar pullback, breaks the low. Now on a smaller time frame, that's going to be more significant. 7:15, 7:30. So this is getting pretty down low by this time. So maybe the times on this don't work out. But if you come into the Asian or in the London session, I'm sorry, the New York session and see that this has already come down maybe even 4 times, right? And now it's consolidating. Maybe you're not looking for the continuation back down. At least not a large move back down, right? This is the Euro US dollar, for anybody who's wondering. Let's get back to, I would like to get rid of this. Okay, so the times didn't really work out on that one, and that's okay. But the idea is still the same, right? Just because it wasn't in the session, maybe you would have missed this trade. I missed it, obviously, because I was asleep. But this is also the 3 weeks or 3 days, previous day's high. 1, 2, pause 3. This is the one that I gave the example like this. So this one didn't work out. Let's go back a week, okay? Let's hit up the high of the week here. And opening range there. Also, I think it would probably help if I had these on there. People call me. All right. So we have an opening range breakout on the Tuesday. And remember I said that I like to look for things on that Wednesday. Wednesday does not really eventuate or like play out the way that you would expect. But look how it reacts, okay? So we have the initial balance and it's now traded. It's real choppy. But the breakout does eventually fail on this Thursday. Okay. So that still gives us our reference for high of the week. And look, like almost to the tick, where did it come back to? And then let's look at distance as far as, so this is what I was talking about measuring the levels of drop, the 170 pips. 150 is 3 levels of 50. Oh my gosh. Get down to the breakout level that fails and can't make that up. I mean, dang near to the pip. All right. Breakout fails, comes back up. Now, this isn't a crazy move on the next day, on the Thursday, but it does give you day 1, day 2, day 3 on the Friday. So day 3 trend day, okay? This is a trend trade back to the high of the week. Now, this seems to be something that really makes everyone struggle, the trend trades. So let's take a look. What time is that? Is that after 2? That's 2:30. Okay, so highest high and the lowest low before 2 o'clock. All right. Look at the price. Look what happens. Oh, this is, yeah, so this is one of those examples that I showed. Day 3, breakout, pullback, 3 levels of rise, back through the high of the week. Yeah, I know. If I want to draw lines, press shift. I'm stubborn, and I've been told that a million times. I know it's probably annoying to watch me draw and dry lines, but yeah. Anyway, let's go back another week. Look at opening range high. Remember I said I always leave those levels drawn on the chart because they are important. Initial balance high. And right after I go over this example, I'm going to show you what he's talking about with the lower low on the inside or the higher high on the inside, basically breaking structure. Actually, you know what? I'll just show you right now. Okay, so this is the low of last week. This is what he's referring to about the lower, the breaking structure. Okay, and we've got high right here. So this is all a consolidation, and think about market structure. Okay, get a high, a lower low, and then this is all on the inside of the previous. This is Monday, so there is no high and low yet. This is all on the inside of the previous week's high and low, which means that this high is on the inside of the previous week's high and low. That's on the inside. So if you looked at it like this, they put in a higher high. They broke structure. Let's look at the time, and you're coming into the New York session. Breakout, pullback, continuation. And then look at the 3 push pattern on the 15-minute chart. I'll zoom in real close. One, 2, 1, 2, oh. 1, 2, 3. 3 push pattern, breakout, pullback, 1, 2, 1, 2, 3, engulfment. That's an example of a first hour trade. And then let's look at it from the Bayesian range perspective of your high and down here's 130, your low. So in my mind, everything in here is no trade. We haven't had any sort of breach of opening range high or low. So, and it's Monday, so it's everything's inside except for you did have a break of the previous day's low, and they've maybe got people stuck down there. And you get a higher high back on the inside, so maybe that tells you we're going to go back up. Breakout, pullback, continuation, level 1 consolidation, rise to level 2. So level 1 consolidation, breaks the high, level 2 consolidation, up to level 3. So this is the trending model. Again, another example of the trending model. And can I put the sessions? Yeah, let me do that right now. Whoa, hey now. All right, let's get these. I'll get these numbers off here like this so that I can see a little better. All right, how's everybody feeling about this this concept? All right, so we already know about previous day's levels, right? Let me break it down like this, in a way like this. You have a trade setup. 3 days of previous day's low being broken. That's your trade setup. That's what's telling me to trade the pair, okay? Remember, I like to break everything down in categories and in lists and things like that so that it's easy to understand for myself. So I've got something triggered that tells me I need to trade this pair, or at least be looking at it, because that's the one that is important. That's the one that's in play for me. Current week, break of previous day's level. Hold on, why is the sessions not showing up? Probably because I have them so light that you can't see them. Would explain it, huh? Let's get that up there. All right, anyway. I don't know why it's not coming up. It's weird. Anyway, probably just a glitch. I need to remove it and put it back on there. The idea of coming out of the Bayesian range, 3 pushes out, gives you the opportunity, if you're trading this with the expectation of the long, once it goes long, right, and you're in the trade, you're holding it, well, how long do I hold it for? Well, you've got one expansion, it pulls back. I'm only in level 1, all right? I've come out of level 1, I'm in level 2, so I need to at least wait for it to break the high. I need it to break the high and continue to go into level 3. It accelerates, it goes through. Obviously, you can see that it gave 2 full expansions in this example. Okay. All right, I'm going to look through some questions. If you want to draw, can you put, reload page helps a bit, increase your, which currency is that? So open range high is the first high. Yeah, I probably just need to, for the replay button, CMF, I know I probably need to adjust the indicator. Let's see. Repeatable 3 big pushes. Yep. All right. Open range high is the first high. Asian session sets up on Monday, and likewise for initial balance. I'm very sorry if I mispronounce your name. Anis. Your question about opening range high, first high, the Asian session sets up Monday. No. All right. So let's get rid of this. There we go. Beautiful. Now we can see sessions as well. Let's look at, first off, I'm going to do what he just told me to do. That might be probably not the right idea. Okay. Anyway, I'm going to figure that out. But range for Monday is the highest high and the lowest low of Monday, of the entire day on Monday. So that would be your opening range because that's the highest high and the lowest low on Monday. If Tuesday was to extend that, so let's say that Tuesday came up here like this and stayed outside, there is your initial balance high. Obviously that doesn't happen here, so we just have initial balance high because Tuesday didn't do that. And then the false break, obviously. Do you trade only when you get a signal day? What if your example of first red day, but you are expecting buys? Do you still trade the buy setup? So, your question is, I have conflicting biases based off of signal days, and I'm assuming you mean the 3-day cycle. So like the 3-day cycle is telling me that I should be buying, but the first red day is telling me I should be selling. I'm trying to figure out how that would play out. How would you even get that? So a first red day, right? Let's say I need a pump day. So if it's pumped and I get a first red day, I'm taking the first red day signal. I'm kind of confused by your question, to be honest. If I have conflicting signals, I'll simplify the whole thing. If I'm unsure about something, I just won't trade it. But the other piece of that is, let's go to a different pair. I feel like I've been staring at the same price for a while. Let's look at USD/JPY. And we'll get our opening range high. Just kidding, that's not where it is. Opening range high, and this is now our initial balance low. It was initial balance high and low. And look at Wednesday, it traded almost completely inside of the Tuesday. And then you said, yes, absolutely. Do you use the week's OR and IB at 50% as an area of interest? Yes, for profit taking. So you'll notice that a lot of times in like strong, so like let's use oil for example. Oil will go let's say 500 pips. 500 pips up, and we get a very strong break out of the initial balance high. And it's a strongly trending market, but there could still be a breakout that fails, but it doesn't always have to go all the way back down to the opening range low. Okay, so that's where the 50% of the opening range initial balance becomes important because it could just go back to there. I mean, it doesn't even have to go there, but I've found in most cases that that is an extremely important area. How do you trade consecutive inside days? That's a strong coil. So it's the same as a normal inside day, except it's the same. It's the same as a normal inside day. Like, so like this was not an inside day. Look what happened though. It's inside of the opening range high and low. We had an inside day, and then we had a day that broke the high, and it went from high of Tuesday. So we broke and had a false break on the inside day, and look how they got there. Oh gosh, little W down here comes up 1, 2, 3, M, and they broke all the way down, all the way back down to the bottom of the inside day. All right, now, so like let's say you were trading this. This is a signal day, good stuff. All right, we want to figure out on Wednesday, what are we looking for, a false break, or are we looking for a trend? You know, because this could just blow off and keep going. So let's figure out on this Wednesday what will happen based off of, we can just look at the Bayesian range. Okay, that Bayesian range is our opening range for the day. Boom. And get that down there. There it is. Oh, I showed this example too. Comes out of the Bayesian range. 1, 2, 3. In golf, that's a extended M at the high of the day. And then, of course, they've come back down in 3. So see how they come down, put in a little thing. Yep, 2, whatever. On 14 March, first green day, inside Wednesday. Yep. Okay. Can you figure out which day cycle it was? Friday. That's what confused me. Expect a sell high day. Paulo. Dave, you're talking about on USD JPY? Let's see here. So Friday, failure up top. I might have to go back to the previous week to figure out the. So you gotta understand, if you're looking at this 3-day cycle. Oh, gold. Oh, gold. I think it was day 3. Friday was day 3. See, this is one of those ones where it's strongly trending. Okay, so you have to be prepared to the cycle is going to get a little confusing on these strong trending markets. You got to start back in the first place. There was a false breakout that's failed. So that's it right there. Day 1, day 2, day 3 should have reversed, but it didn't. Okay, we kept going. Day 1, day 2, day 3 was an inside day. So we shifted over, should have reversed again, didn't. So maybe this is trap volume trapped at the low. 1, 2, 3. Paulo. If that was my, if I had to give you a step-by-step on these strong trending weeks, my step 1 would be, if you can't see it, don't trade it. 2 would be, go back to the first place, the last place there was a breakout that's failed at the low and sent you in the direction up. Okay, so that was, if you can see right down here. And then just try and count from there. Okay, we had a 1, 2, 3 on Friday. Friday didn't reverse. Instead, it just kept going. It went straight up. Okay, so it's like, okay, well, this was supposed to be day 3, supposed to turn into day 1. It didn't. Just kept going higher. So maybe it's day 1 going up in the up direction. Okay, day 1, day 2, trending higher. Day 3 should have been a day 3 where it reversed, turned into an inside day. Okay, we'll put the day 3 over here. Oh, well, probably should type on the thing. That'd be good. Day 3. Okay, this should have reversed. It didn't, but we did break a previous day's level, and then we went higher. We keep going higher. All right, just keeps going higher. Keeps dragging us up. So this day 3, maybe it's still day 3 going up. Okay, so maybe this is now day 1 of going up. Again, we just reset it. Day 1 going up. Day 2 going up, and then day 3. Paulo, does that help you? Good stuff. Let's see here. Slide 18. Oh boy, you named a specific slide. All right, let me. Is this gonna? Let me get to. Let me pull this over here. Oh, there we go. Slide 18. Boom. Let me pull this. Okay. Slide 18 example, March 10th. We're in a failed breakout, day 3. So we look for a reversal back down from a high day sell setup. NFP news broke out of the Bayesian range, giving a yeah, exactly. So, all right. First off, let me get back to Euro USD. And this is something else too. Like, think about market structure. What would you say this was? March 10th. All right. Let's just look at market structure. Scrunch it up, all right? So yeah, I can see that we've got that high right there. And we've got, oh, probably should click the button. That'd be cool. There we go. We got that low right there. So we just came down, essentially, and had a breakout that failed on this low down here. Again, this is a third hit to the low. All right, down here. Back on the inside, okay, we've had, again, market structure. Break and structure, right? This is a break back on the inside. Yeah, you're right. All right, I got it all lined up now. Good stuff, you know. Gotta get with the program. So we've got 3 hits to the low. I'll re-explain this real quick. We've got a high and a low on a Bigger scale, right? Now zoom in. Break the low, break the high. So now we have a break in structure. And we're breaking out. The market is breaking out at this point. It is not breaking down. So if you want to look at it from that perspective, it is failing to go lower. It is going higher and higher and higher. It is failing to go lower multiple times. This is a big short squeeze when you really look at it, right? Look at all the candles. Come up, strong move back down, come back up, strong move back down. And it just keeps on failing to go lower. And it just keeps on dragging people higher and higher and higher. They failed to go lower, failed to go lower, failed to go lower. Okay? So if you want to look at it like that, wow, okay, they failed to go lower, failed to go lower, failed to go lower, failed to go lower. Boom. It pops. The bubble popped. You want to think about it like, oh, all the shorts gave up. Sure. All the shorts gave up. We're going long. I don't use this crap, but I've heard it. Rally-based rally. It's a breakout, a pullback, and a continuation. And when you look at it from the Bayesian Range perspective, I've given you 4 templates. So there's only, I'm not going to say there's only 4 things that it can do, but you've got 4 ideas in your brain. Okay. Does that look like a 1, 2, 3 to the high? No. Does that look like a out of consolidation 1, 2, 3? No. Does that, does this look anything like an M? No. In fact, you know what? Let's do it like this. Let's even drop down to the 1 minute on this entry. And we'll take a look at the times. Okay, because everything that I've said about time engulfments and price patterns, all of that is still relevant. And I think this was a news candle. Don't correct me if I'm wrong. So you want to talk about maybe a first bounce kind of play or entry. So we've got the news. Is that the high of the 8 o'clock candle? Yes, it is. All right, so we've got the high of the 8 o'clock candle right here. Okay, let's look. Let's start lining up some times here. That was 8:30, so where's 8:45? 8:45 is up top. Oh, almost marked the wrong thing. Okay. So at this point, they're coming back down. Good stuff. Where do they flip the book? Where do they flip the market and trap? Where have they stuck everybody? Right there. 8:59. Oh, sorry. 8:59 is this candle right here. 9 o'clock. Big bearish candle. And they instantly rip it back up and engulf it. They just stuck everybody. Okay. And then look at the price action. Nice little M. Got everybody shortened down. One push down. Second push down. And then the third push down. If you want to look at it like this. Look at everything's measured like levels, right? 1, consolidation. 2, consolidation. 3, engulfment. I'll do that again. M. Out of consolidation. Level 1. 1 push. I'll use different terms so that everybody really gets this. Out of consolidation. Level 1. Consolidation. Level 2. Consolidation. Level 3. Engulfment. So this is 1 push, 2 push, 3 push, engulfment. And then using the time, 9 o'clock opens up in a big bear candle. 9:01 engulfs that candle. Everybody who just went short on that 15-minute bar is now trapped, right? Because the 8:30 bar, remember what the 15-minute looked like. The 15-minute, the 8:30 candle was huge. Everyone's I guarantee you, there's people shorting this candle. Right? 9 o'clock opens up on the 1 minute chart. You can see them, this wick. That candle that I showed you that push down and then the push back up is this wick. And then 9:15, obviously you can see engulfs and keeps going. Does that help anybody? Does everybody understand what I'm getting at? Does that help you with the 3 push idea? So like these levels, looking at the levels, that is the 3 pushes, okay? There's lots of different variations, but that's just one of them. When you live trade, this price action, if this short the top of the channel, you will fail to get paid or even... NFP, yep. Awesome. Heck yeah. That's what I like to see. Yeah, so I'm telling you. So like, and then this is a great example of if you just take one great trade in the week. Let's say I just waited for this one trade, okay? And I was like, wow. This is a trending day within the week because they've consolidated the entire day. This is the first bounce move that you want to see. A consolidation, an explosive candle, all right? You don't want... A lot of people are confused about the whole first bounce thing where it's like wick up, wick down. Oh, where's my first bounce? No, you want to see big candle because the first bounce is a momentum trade, okay? Now combine that with Asian range idea. So this is our level 1 rise, okay? Oh, bless. What have I just done? What I was trying to get at is if you take the trade, you're at a level 1, you're in level 1 consolidation. You enter in on level 1 consolidation and it rises to level 2, you're in level 2. Okay, well, it needs to rise to level 3. Let's figure out what, it pulls back in one candle. I'm holding. At this point, I'm holding because we're in level 2. We haven't gone to level 3. I need to hold for level 3. I need to suck every penny that I can out of the market logically, because that is logical. That could be part of the trade plan, right? Rise level 2, we're in level 2. Wait for level 3, we're in level 3. Take profits. Boom. If I could somehow I mess things up and I moved things around. Is that what I was just looking at? Yeah. Okay. Rise level 1. This is what I was saying. If I enter in on level 1 down here on the, remember I said that pen, enter in there on the engulfment. Rise level 2. Do you see any pullback at all in this candle? No. Okay. I'm not taking any profits in. Do you see any pullback in that candle? No. Okay. There's a pullback. Okay. Well, maybe that's, we're getting towards the end of the day. Maybe that's level 2. Rise level 3. 1, 2, 3 to the high. That's 1, 2, 3 to the high in level 3. Might be time. That might be time. You've just squeezed every little bit you could. Think about your risk to reward, right? 1 bar stop, bottom of that candle. I'm not going to say you caught all the way to the very top. Let's just put it up here around, we'll be conservative around here. Think about risk to reward, right? You start hitting 1 to 7s, 1 to 4s, 1 to 5s consistently, and that's going to really boost your, especially if you can do it with more than a 50% accuracy, right? It's really going to help you. Hey, no worries. Have you discussed this? Can you show a day 2, 3 trend trade, what it looks like? Strong trending markets tend to throw me off. Yes. Me too. That's why sometimes if you're confused, maybe that's just not the one for you. But let's take a look, right? Gold. I think we can all agree that this is strongly trending. This is a strong move. Boom, boom, boom. All right. I know I just talked about it, so for anybody who already heard me, I apologize, but I want everybody to understand. I want everybody to be on the same page. Strongly trending. 1, 2, 3, 4. Would have been 4 days of rise. 3-day cycle-wise, though. Breakout that's failed. Day 1, day 2. Day 3. Should have reversed, but it didn't. Okay? It went vertical instead. Day 1. Day 2, we're still in the direction of, maybe this is all trapped volume. Okay, so now you've got trapped volume underneath a level. Day 1, day 2, we're still in the direction of the trapped volume, so we're going long. Day 3 turns into an inside day. Day 3 can't be an inside day, so day 3 shifted over. Come down, hit previous day's low. Not necessarily a reset of the cycle, but it is a reset of the 3 days of previous day's higher low being broken. So now, broke that, came back and hit it again. Day closes. Maybe this is day 1. Maybe this is our volume trapped at the low. Maybe we need to trade the next day on in the direction of that peak formation. Day 2 and then day 3. 15K gold by 2025. Yeah, that's not how we trade. I don't know. Or at least not how I trade. 2025 is... Show me the 3-day cycle on 2025. I don't know. Apologies if you have already discussed. Okay, yep, so I hit that. Can we buy your course yet? Don't have a course, guy. Getting clearer and clearer. That's what I like to hear. Heck yeah. Every time I hear one of these, someone say that, I just love it. What's the indicator you're using? If you go to my Discord, CMF has been very gracious, and he's created a indicator called Pips to Profit for the channel. And it does everything. It does everything for you. And you can go back and do previous day's highs and lows. You can set the history. You can put on your numbered levels. You can do everything. So Pips to Profit is the indicator. It's in Discord. It's in the indicators channel, and it's also, if you hit the pinned, it's pinned. And also he has his donation stuff there as well, because he put months. No, I wouldn't say months. I don't know if it was months. It was over 3 weeks though. He put about 3 or 4 weeks of work into this. So if you all want to download this, feel free. But also keep in mind that he worked very hard on this. And if you are feeling generous, then I don't ask for payments of any kind, but let's see. Any more questions? Let's get some more questions going. I want to be able to answer as much as I can. I feel like I've really hit and drove a lot of things home with that slideshow. And for anybody who's in here who doesn't know, that slideshow, just like all of my other videos, I've linked it down in the description below, so anybody who wants that slideshow is able to access it. What's the signal? It's likely to continue trending rather than reverse. Okay, hey Chalk, so for the trend, right? Let's go back to gold, like we were just talking about. I said I was going to make a video on parabolic moves, and let's just go to a blank chart. Look at high of the week. In a strongly trending market, we have the high of the week. Thursday comes up, creates a space on day 3, turns it into an inside day. Inside day is already a signal day. The market should have reversed. This should reverse, okay? It's day 3. It doesn't. Look at the price action. Look at this ramp. It's just ramping. squeezing, 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 consolidating. This is the thing though. They're consolidating under the high, and it explodes. Okay, and then also context of the market. Zoom out a little bit. I think I saw people in the Discord mentioning this, and I, of course, had seen it as well. But think about the opening range initial balance for the entire year. And I talked about this in my watch list the other day. January, high. Breakout that's failed in February. Where's the low of January? Let's find it. There's the low of January. Amazing. Comes down and works. Opening range, initial balance low. 3 pushes and reverses. Here's the break in structure on the daily chart. The dump and the continuation on the daily chart. Rise level 1, rise level 2. They were consolidating under the high of the year. Okay? And they hadn't taken it out yet, so there was space. All of this space under the high of the year. So this is where definitely need to zoom out a little bit. Thank you for doing this. I knew Stacey Burke's work, but I never traded them. I would take 4 or 5 losses before getting a winner. With your videos, I finally understand how to make this work. Absolutely. Understanding when not to trade. Because I used to do the same thing, okay? I would rack up. When I first started trading this method, this was my understanding of Stacey's stuff. All right, this is all I did was, let's see, high of the day, low of the day. I come to the session. Where's the high and low of the day? High of the day, and then I'll just draw my low of the day. I had no understanding of 3-day cycle or anything, okay? And I would be like, okay, I'm at the high of the day, I'm going to short. And that was my whole methodology. And then I would get things like this. This is where I would lose my account. But then a lot of other days it worked. So I was like, well, I'm finding 50-50 consistency. Maybe I'm onto something. And that's when I really broke down the rest of the strategy. Sorry to ask, what name of the strategy or strange does it relate to any smart money? All right, so as most of you probably know, I learned most of everything that I know from Stacey, and this is all my interpretation of his stuff. I've been trading full time now since November of last year, and although I would say 90% of what I've learned is from Stacey, I have, of course, modified and incorporated other things, that being Beat the Market Makers stuff I learned from him, Steve Morrow, and the only thing that I've taken from ICT is market structure, and that's the breaks and structure and all that stuff. That's who I learned that from. And the whole combination of all of those things I have put into this. I cannot see the asset or the time frame. Sorry, this is gold, and this is the 5-minute chart. Could you cover scenarios where you bring stop loss to take partials? All right, I'm going to show you how I used to do it, and now that I'm changing things up to. Did I ever use a trading journal? Actually, yeah, we're going to go into that instead. Tuesday makes when weekly low becomes day 1. Or just freestyle it. Blues, no. I've said this quite a few times, but I was in the military and I was saving to become a full-time trader, but I didn't have a profitable system yet. I told myself I need to be profitable in the markets for 2 to 3 months at least before I'm allowed to use real money. So I did everything on demo. I journaled everything, and I tracked everything through demo. And once I achieved 2 to 3 months of profitability, I said, okay, I'm ready. And that was, in short, what I did. Did you go over NQ? No. Trying to cope with ICTs Should I replay your live or start with, hey, so I've had a mixture of things. People have said you should watch Cameron's videos first and then go watch Stacey's because they'll make more sense. And then some people have said watch Stacey's, start here, playlist, and then watch Cameron's videos and they'll make more sense. So I'll leave that up to you. I would almost say maybe go watch Stacey's start here playlist first just to get the scope of everything. Then maybe watch mine and then go back and watch his again, because I have heard that watching mine seems to really clarify a lot of things because it's said in a different way. Carl, what do I think of gold USD? Well, I think that it was a parabolic trend trade on day 3, and it's gone higher, and it went 3 levels out of this consolidation, 2, and it was going up into the 3rd, and we took out the initial balance high for the year, and that's about all I know. Yep, just watch back and forth multiple times. All right, more questions. Let's get them. I'm going to go back through. Let's go through gold. Everyone seems to really love gold, and I'll use this methodology of initial balance and all that stuff real quick just to hammer it home. Let's hammer it home. I want everybody leaving here feeling like they really got something. We'll start on this week, so you just know I'm not cherry picking anything. I don't even look at gold on a daily basis, to be honest. So we got Monday, breakout that's failed. Breakout that's failed. In fact, I'll do a full chart, okay? Breakout that's failed. So that's day 1, 3-day cycle, okay? What do we know about day 1? In the chat, I want to see it. Day 1, 3-day cycle. The breakout was at the low of the week. What are we looking for on the next day? I'm going to get my thing. I'm ready to type. Someone type it in there. Nobody's typing. All right. I'm throwing it in there. Long. Yep. Buy low. Not necessarily signal day, but it is a buy low day, right? Not to mention, look at this. You got a high right here, and then a higher high, break in structure. Buy low. There it is. I'm looking to buy low. Boom, boom. 3rd level drop. What time is that? Oh, look at that. New York session. Vertical. All right, so day 1, day 2. Day 2 of the 3-day cycle, we got a buy low setup. Off of the low of the week. Now I'm going to draw my opening range high. Okay. For the week. Day 1, day 2, day 3 of the 3-day cycle. They keep going higher, and it does not come back down. Now, day 2 of the week being Tuesday, right? Tuesday is the 2nd day of the week. Gives us our initial balance high. If this was to roll over and go back down, we would look for a move back to the 50% of the initial balance high and low, or to go all the way back down to the low of the range. That does not happen. Instead, we have support on the initial balance high. Can I mark out Bayesian Range? Sure, why not? Let's go back. Let's hit it up down here. I don't want to really delete all of this, but I'll do like this, okay? Where's 2 o'clock? So that is the lowest low right here. And it's from the pens, okay? I do it the same way every time. I use the pens. So like that is the low. And this candle, yes, that's 2 o'clock, and we have equal lows basically with that one. And then you've got 8 o'clock right there. So I'm marking after 8 o'clock the high. Oh, I just told you I use the pens and then, hold on, shift key. Yep, slow clap. There we go. So there's our Asian range. Look what happens. Out of the Asian range, 1 push, 2 push, 3 push. This is a micro W at the low of the day. And tweezers, whatever you want to call it, for the explosive move back up. See how, like, all in here is like the no trade zone, okay? So knowing when not to trade, again, a great tool. They come, and I'm looking for a buy low, right? So they haven't came out of the Asian range yet. We're not at the low of the day, blah, blah, blah. They come out of the Asian range. Now we're in London, so that's good. Maybe we can get a London trade back up. They come back down 1, 2, 1, 2, 3, blah, blah, blah. And the rest is history. And then look at how they come back up, too. Out of consolidation, 1, pull back, 2, pull back, and then they break the high. We're all the way at the high, so, 3, we'll call it 3, but they extend it even further. So we've got 3 levels now out of, this looks kind of like a 1, 2, 3 anyway. It's like out of level 2, 1, 2, 3, blah, blah, blah. So hopefully that's useful. Let's zoom back out. All right, day 3. We're looking for either a trend trade or a reversal. Let's mark it up. I've got my, what is that? Initial balance high. So I need to get my range on here to try and help me understand what's going to happen. Okay, so we've got Asian range low. Asian range high. Giving us our no trade zone, right? That is a really choppy day. If I thought this was going to be a reversal, I needed to see it come out of the Asian range in 3 pushes. 1, 2. They did come out a 3rd time. So maybe you could have traded that. I don't know if that's 50. Let's see if this is a 50 pip range. Yeah, I'd say that's a pretty good range, 80 pips. But then, looking at the following day, so let's say if you were to have taken that trade short, the next day opens up and they still haven't gone lower in a strong trend. Let's see, inside day. So this day is an inside day on Thursday. Giving us our high of the week, and our initial balance down here could act as the low of the week. And again, like this market is it's just breaking out over and over again at this point. So let's find our, I don't even have to mark this up because that's 2 o'clock right there. And then 8 o'clock down here. So we're in a strong trending market with no reason to go back down. That's all we know. And in fact, it looks like this, like day 3, maybe this is day 1 going up, day 2, and then again, day 3. No trade zone, breakout, they've pulled back, and then it continued. Point to understand about high day, low day. High day, low day, all that is it's a part of the setups, right? So if I'm looking for a buy low or a sell high, I'm looking to sell high at the high of the day or the high of the session, or I'm looking to buy low at the low of the day or the low of the session. That's all you need to know about high of the day, low of the day. It's based off of 3-day cycle and signal days, because the signal days tell you exactly what you need to know. Right, so if you get a first red day, I'm looking to sell at the high of the day. That's all there is to it. You can Google chat. Heck yeah, guy. Really, always just love the positive feedback you give me. It keeps me going. Forex is a little different with inflation. Yeah, but okay. Good stuff. So, all right, so that ends the week, right? So that ends the week, and then we get a new week. It starts fresh. Let's move this back over here. And it starts over again. And you've got initial balance high. Tuesday extends. Initial balance low. Breakout that's now failed low of the week. So we're going back up again. Are we back on the current week? No. This just looks exactly the same. That's funny. Anyway, so we got a breakout that's failed now. Day 1, day 2 in the direction of, remember, the breakout that's failed. Short squeeze. Breakout that's failed. So day 3, everyone's expecting probably a reversal, right? But we've got our initial balance, which was a breakout that's failed. And remember what I said about the 50%. Let's see. How do I pull up the 50% on here? Okay, remember those 50% are important. So we've hit the 50. Why isn't it reversing? And then it goes vertical, right? I should have, if it was going to reverse off the 50, it would have, but it didn't. All right. I've been here for a little over, we're going on 2 hours now. I think I'm going to do one more question and answer, and with that, I'm going to close it. But I want to make sure everyone's questions, if anybody has questions or want to see anything else, let's hear it now. Anybody confused about time engulfments or entry stuff, anything? I want specifics though. Paulo, when it breaks on both sides, the last hit direction. Daily divider works for me because I have it turned on specifically in TradingView. I just go into TradingView. Actually, you can just go down here to the bottom right corner right here and click the session breaks. How do we trade day 1 of the 3-day cycle if day 3 didn't fail? Wait for the market to give you more information. If day 1 or if day 3 doesn't fail, it's either going to fail. I mean, it can only do two things, right? If day 3 doesn't fail on the current day, it's either going to do two things. It's either going to fail on the next day, so that previous. All right. Let's say this is day 3. Oh, no, that's a horrible example, Cameron. Let's not say that's day 3. These are all bad examples because it's just going parabolic. All right. There we go. Sure. Let's say this day right here where my box. Nope. Let's say this day right here where my box is day 3. And you'll notice that it's closed outside of the box. I know it's not actually day 3. Just bear with me. I'm just using this as a dumb example. It's closed outside of the box, so it can only do two things at this point. It's either going to, on the next day, close back inside of the box, or it's going to continue outside of the box. And obviously on this day, it went down. So like if we get a close back on the inside, maybe I'm looking for a trade back down because day 1, day 2, and I'm only looking to take trades in the direction of the false break or the breakout that's failed, day 2. So I would be looking for the short, blah, blah, blah. Sorry, my question is about day 3 was a reset instead of a failed breakout. That's what I'm saying, Jason. So like, this wasn't a failed breakout. It closed outside of the range, right? And then the next day opens up and we're still outside of the range. It can only do it can only do two things. It can either keep going, or the breakout from this day will fail on the following day, making this the day 1 and then the day 2. Would you rather trade Euro USD or gold? I don't trade gold anymore because my risk to reward wasn't high enough. So that's an interesting question. All right. The reason I've only got 4 pairs and they're all currencies. I used to trade gold, NASDAQ, and I do enjoy trading them. You can make a lot of money doing so, all right? But why would I trade instruments where I am looking for a consistently 1 to 3 or 1 to 4 when I can trade instruments risking, and remember, max stop on gold and oil and stuff like that is 25 pips, right? So that's a lot less size that I can use compared to currencies, where my max stop is like 10 pips, maybe 6. I've found that a lot of times my stop on currencies is like 6 pips, but I'm going for 25, 30, 40 pips, 50 pips, you know, so my risk to reward, the pips amount that I'm going for is lower on currencies, but my risk to reward is a lot bigger. Anyway, could you go over definition of first red day, first green day? Absolutely. Let's see if I can find one that I like. So to define a first red day, I'm going to use this one. I'm going to use this one right here. First red day. I think this is the high of the week too, so it works out. Yes, it does. Good stuff. First red day. First criteria, pump day. So that's this day right here. I had a good pump. Criteria 2, I need a day that closes below the open. This is also day 1 of the 3-day cycle. We'll just add that in there because we had a breakout that's failed. On the following day, I'm looking for a day where I can sell the high of the day. Okay? That's all there is to it. First red day, pump day, day that closes below the open. And then the day prior or following that, I'm looking to sell high at the high of the day. Flip that upside down. Boom. Flip that upside down. Change this word to dump. And you've got your first green day. Hopefully that answers your question. How does it differ? So notice this dump day. We don't retrace more than 50%. I want space to... So like I want all this space right here to be filled. Obviously we didn't get a fill all the way, but you get the idea. Could you move your screen capture? Oh, yeah, you're right. There we go. I know it says dump. It's because I inverted it. Hold on. We'll get that back. Pump. Pump day. Dump. Good stuff. 3 levels of rise. Fall. Strike zone. Low of day. High day. Patrick, that is... All right. Day 2. Ideal. Ideal day 2. Monday, Tuesday, Wednesday. Breakouts failed, low of the week. So this gives us a day 2. Did that fail? That's pretty close, but it did. Technically it failed. So we've got day 1 right here. That means that everything inside of this box now is on the inside. Okay? We've had a breakout that's failed at the low of the week. Awesome. Okay? we have had now lower low, lower high, lower low, break of structure on the inside, dump back down. Okay. Does not make a lower low, but it does start to go back up. Look, lower low, I'm sorry, lower high, lower low, higher high. And this is where measuring comes into play. So once you, basically what he's saying is once you get a higher low or a higher high, just think about it in market structure terms. Once you get a higher low or a higher high, the market needs to retrace, right? So let's say you're in an uptrend or downtrend. We'll say downtrend. Lower low, lower high, lower low, higher high. I'll use pictures. Lower low, lower high, lower low, lower high, lower low, higher high. Boom. I need to measure from the high to the low, 3 levels of drop. Ideally, we get 3 levels of drop. That's our strike zone. It's just a check in the box. Do we have 3 levels of drop? Yes. Okay, cool. Now I can start looking for a trade, and I get a, let's say we get a little something like this, and look to take it back up. That is, we get a break in market structure. I'm measuring back down or up for my 3 level strike zone. Question, could you go over definition of first red day, first green day? Just did that one. At day 2, you measure 3 levels of, yep, just did that. Could you move your screen capture? Yep, fix that. Could you show your fib settings? Also in Discord, I have it in there. I should be pinned, but if this fib setting is like this, hurry up, get a screen capture or pause the video, whatever you gotta do. And then the other one is, oh, hey, hold on. What have I done? There we go. The other one's like that. What is my favorite setup? So I really used to like to short, and I'm trying to shift my brain. Okay, I'm trying to really, because trading is all about growing, right? I want to grow as a person. I want to grow in my profession. I want to grow in my business. There's a lot of great long examples, and eventually this bear market is going to end. It's already kind of shifting. Market conditions change, blah, blah, blah. Sometimes there's long is getting better and better. All right. I want to be prepared and capable of working both sides of the market. In the past, I've really been good at shorting. Now I'm shifting my mindset from a bias of short to long. Okay. So my long short bias, I don't have a favorite anymore, but I really like when I've noticed the market has gone 3 weeks of rise or fall, and I've got a very well-defined, let's go back to GBP, JPY. Oh yeah. This was one that I missed because I was on dang vacation. I'm sad about it. It's okay though. Let's back this puppy up. In fact, I'm going to go to the 1 hour chart so I can zoom out better, but the levels remain the same. Everything's still the same. All right. Yeah, there we go. Count with me. 1 week of rise. 2 weeks of rise. 3 weeks of rise. Now, remember, markets are fractal. We have rise, level 1 consolidation, rise, level 2 consolidation, rise, level 3. See what I just did? So once you're on level 3, week 3, I'm in level 3. And look what this thing did. Someone want to point out to me the 1, 2, 3 on a 1 hour chart on level 3. I think this is probably the New York session too. Yep. 1, 2, 1, 2, 3. Big dump. Yep. So that's my favorite trade right there. 3 levels of rise. Week 3, level 3, all the threes. You got all the threes lined up, and you're at the extreme. That always is going to provide, in my opinion, the best trade. And then just leaving these, you can leave these levels projected, right? So this is still level 3, and look how it still acts as resistance, right? Peak formation. And we're working level 3. Up into level 3, fat dump. All right. What keeps your mind clear enough to differentiate between last week's and last month's? It's all about the setup. They're reoccurring. Nothing ever changes. There's a high, there's a low. The market's moving. It's just going to keep going and doing the same thing. As long as human behavior stays the same, the markets will remain the same. All right. I think I've got everyone's question who's asked a question answered. I have really enjoyed this stream. I really hope that everybody has as well. Please, before you go, do me a really big favor. Hit that like button. It really does help, more than you probably understand or know. Before you go, maybe just throw some more comments in the chat too, saying goodbye. It really does help me out. That's all I ask. I don't ask, I don't sell anything or anything like that. So thank you all so much for being here. I really do hope that you took something out of this. Like I said, the link to this slideshow is in the description. I do these live streams every Sunday, 9:30 a.m. New York time. I try not to limit the time, but if I've run out of material and people stop asking questions, then I will generally go on my way. I hope you all have a wonderful Sunday and have had a great weekend. I can't wait to see you all next week for the next week's trading. And see you later.